Welcome to our exploration of regulatory challenges in fintech. As technology continues to reshape the financial sector, fintech companies are at the forefront of innovation. However, with rapid growth comes the need for robust regulations to ensure consumer protection, market stability, and fair competition. In this video, we'll break down the key regulatory hurdles fintech firms face and why navigating these challenges is crucial for sustainable growth. Let's start by understanding what fintech really means and why it's become such a hot topic in recent years. Fintech, short for financial technology, refers to the integration of technology into offerings by financial services companies to improve their use and delivery to consumers. This includes everything from mobile banking and digital payments to blockchain and robo-advisors. The rise of fintech has made financial services more accessible, efficient, and user-friendly. But with these advancements come new risks and regulatory considerations that traditional financial institutions may not have faced. Regulation plays a vital role in the financial sector. It ensures that companies operate fairly, protects consumers from fraud, and maintains the stability of the financial system. In the world of fintech, regulation is even more important because new technologies can introduce unfamiliar risks. Without proper oversight, these risks could lead to financial losses, data breaches, or even systemic crises. That's why regulators around the world are paying close attention to fintech developments. Regulatory environment for fintech varies widely across countries. Some nations have embraced fintech with open arms, creating sandboxes and flexible frameworks to encourage innovation. Others have taken a more cautious approach, imposing strict rules to manage potential risks. This patchwork of regulations can make it challenging for fintech firms to expand internationally, as they must navigate different requirements in each market. One of the first hurdles fintech companies face is obtaining the necessary licenses to operate. Depending on the services they offer, they may need to comply with banking, payment, or investment regulations. This often involves rigorous background checks, capital requirements, and ongoing reporting obligations. Navigating these processes can be time-consuming and costly, especially for startups with limited resources. Tech firms must implement robust anti-money laundering measures to prevent illegal activities. This includes verifying customer identities, monitoring transactions for suspicious activity, and reporting to authorities when necessary. AML compliance is a major regulatory focus, as fintech platforms can be vulnerable to exploitation by criminals if proper safeguards are not in place. Closely related to AML is the Know Your Customer or KYC requirement. Fintech companies must collect and verify information about their customers to ensure they are not facilitating fraud or other illegal activities. KYC processes can include ID checks, address verification, and ongoing monitoring. While essential for security, these requirements can also create friction for users if not implemented smoothly. Fintech platforms handle vast amounts of sensitive personal and financial data. Protecting this data is not just a technical challenge, but also a regulatory one. Laws like the GDPR in Europe set strict rules on how companies can collect, store, and use customer data. Non-compliance can result in hefty fines and loss of trust. As fintech grows, data privacy will remain a top concern for regulators and consumers alike. With increasing digitalization, fintech companies are prime targets for cyber attacks. Regulators require firms to implement strong cybersecurity measures, such as encryption, regular audits, and incident response plans. These rules help protect both the company and its customers from data breaches and financial losses. Staying ahead of cyber threats is an ongoing challenge in the fintech industry. Regulators are deeply concerned with protecting consumers from unfair practices, fraud, and financial loss. Fintech firms must provide clear information about their products, ensure transparency in fees, and offer mechanisms for dispute resolution. These requirements help build trust with users and prevent abuses that could harm the industry's reputation. Fintech companies often operate across borders, offering international payment services. This introduces additional regulatory complexity, as firms must comply with the rules of multiple jurisdictions. Issues like currency controls, sanctions, and differing AML standards can create significant hurdles for global expansion. The rise of cryptocurrencies has posed unique challenges for regulators. While some countries have embraced digital assets, others have banned or heavily restricted their use. Fintech firms dealing with cryptocurrencies must navigate a rapidly evolving regulatory landscape, balancing innovation with compliance and risk management. To encourage innovation, some regulators have established sandboxes, controlled environments where fintech firms can test new products with limited regulatory requirements. These sandboxes allow companies to experiment while regulators monitor for potential risks. While not available everywhere, sandboxes have become a popular tool for fostering fintech growth. Open banking initiatives require banks to share customer data with third-party providers, with the customer's consent. This has spurred innovation in fintech, enabling new services like account aggregation and personalized financial advice. However, it also raises regulatory questions about data security, privacy, and liability. RegTech refers to the use of technology to help companies comply with regulations more efficiently. This includes tools for monitoring transactions, managing risk, and reporting to authorities. RegTech solutions are becoming essential for fintech firms facing complex and evolving regulatory requirements. Startups in the fintech space often struggle with the cost and complexity of regulatory compliance. Unlike established banks, they may lack the resources to hire dedicated compliance teams or invest in advanced security systems. This can slow their growth and make it harder to compete, especially in highly regulated markets. Regulatory landscape for fintech is constantly changing as new technologies emerge and market dynamics shift. Regulators must balance the need for innovation with the responsibility to protect consumers and maintain stability. This means fintech firms must stay agile and adapt quickly to new rules and expectations. Successful fintech companies often work closely with regulators to ensure compliance and shape future policies. Open dialogue can help identify potential risks early and create frameworks that support both innovation and consumer protection. Collaboration is key to building a sustainable fintech ecosystem. Let's look at digital payments as an example. Companies like PayPal and Stripe have revolutionized how we transfer money, but they must comply with a range of regulations, from AML to consumer protection. Their success shows that it's possible to innovate while meeting regulatory requirements, but it requires ongoing investment in compliance and risk management. Looking ahead, we can expect regulatory challenges in fintech to evolve alongside technological advances. Areas like artificial intelligence, decentralized finance, and digital identity will pose new questions for regulators. Staying informed and proactive will be essential for fintech firms hoping to thrive in this dynamic environment. Summary: regulatory challenges are a defining feature of the fintech landscape. While they can be complex and demanding, they also provide opportunities for responsible innovation and long-term growth. By understanding and addressing these challenges, fintech companies can build trust, protect consumers, and help shape the future of finance. Thanks for joining us on this journey through the regulatory maze of fintech.